Well, thank you so much, Dan. Really appreciate the opportunity to share with you guys a little bit of my venture in the trading world. So today we're going to be talking about hidden order flow and how that has affected the markets over time, as well as how it affects the markets today. So we're going to get into some live scenarios, why the market does what it does, and kind of my unique approach coming from more of a logical slash very systematic approach being a programmer. So just out of curiosity, how many people out there are engineers and more technically oriented? Just kind of curious. All right, looks like we have several techies out there. All right, so do we have any electrical engineers, just out of curiosity? All right, well, you guys are in for a treat. So I'm gonna show you some very interesting stuff of how fractal harmonics and the marketplace all tying together. So it's very, very cool once you see the the relationship and the correlation, and hopefully I do a good job in opening that up. So based on how I look at the market, I really needed a reason as to why the market does what it does. So in my endeavor in trading, which started 15 years ago, really looking to see what moves the market, and I came up with the ideas of, well, it's nothing that your high school economics teacher didn't teach you. It's truly supply and demand, but you have to know how to look at those terms and how those terms shift over time. So let's go ahead and get started here. I'm going to be talking about events, okay? So all you programmers out there may be able to stay in tune with me a little bit here, and we're going to be looking at different types of events and how the software works, how this mentality works in relationship to a very systematic approach. So I'm going to start off in a little bit different area than most people, and I'm going to talk about statistical analysis and probabilities, okay? So I truly feel that trading is about 80% mental and 20% technical when it comes to discretionary trading, okay? And the reason being is of this chart right here. Now, this is one of the charts that the APA community actually passed along to me throughout this journey, and I thought it actually spoke volumes about what's really behind the statistics of trading. So what this chart represents is how many losses in a row do we have, okay? So given any winning percentage, all right, 2, 3, 4, you know, how many losses in a row, how often will that get hit, given a certain winning percentage? And I just highlighted 50% just to kind of give us like a breakdown of, hey, here's 50%, and as you can see, you could have at 50% a lot of losses. Statistically, you can tie those losses all together. Now, the sample size is out of 100 trades, okay? And from a pure statistical probability, if you are not hitting 80% and above, your statistical losses can go extremely high, okay, and very, very fast. So, you know, we could, let's say that you're doing 60 to 70% on whatever plan you're looking at here. Technically speaking, you could easily go 6 to 7 trades in a consecutive losing streak. Now, how does that make you feel? How much dependability will you actually have in your strategy. If you're looking at 6 losses in a row, you know, you're winning more than half the time. Even at 70%, you know, 5 losses in a row, easy, you know, and that could happen 20% of the time out of a sample size of 100 trades. And when I looked at this, and then I double-checked this whole sheet just to make sure that that was truly the case, and I was like, dear God, what do we have here? You know, like, this was absolutely profound. So when looking at how you're settling up with your broker every day, I think this is the reason why so many traders fail in this industry, is because it's the sheer probability that defeats them, okay? And this was a real eye-opener for me as far as the mental side goes, as far as statistical analysis goes, you know, all kinds of wonderful things. But these trade events happen all over the place, okay? And just like these trade events happen, market events happen, you know, market shifts up and down throughout time. And what drives the market? You know, I truly believe that it is a concept of supply and demand. And what we're really attempting to do is to identify where is supply and where is demand in a dynamic marketplace, so that we understand the why behind the market movement. Now, this really came to fruition for me about 5 years ago when I had my first child, and I started looking at one of the baby monitors, and I just thought that this was amazing, because, you know, we can all go to charts here pretty shortly, but I thought this was very, very profound, okay? And what this is a little baby monitor EKG, okay? And if you look at price moving up and down on this little monitor chart, it showed me something that I never thought I would really see before, and that is, well, at first I said to myself, you know what, I could trade this. I can trade this little squiggly line up here. Let me zoom in here a little bit, but I can trade that. That's doable, you know? And here it is, a baby monitor at the hospital. And I was like, this is tradable. I was like, that's totally crazy. What's going on here? Why do I see that and I see a pattern I can trade? You know, I see a double bottom, I see a double top, I see a higher low, I see a lower high. And I thought, that is absolutely profound. How is this working that in nature, this pattern, this systematic example is working through different industries, through completely unrelated things? And I thought, you know what, it's a fractal that's happening. What I'm seeing on our charts is fractally based. So if I can zoom in and find the most common denominator, okay, I'm not going to try to get too mathematical on you guys, but if I can find a common denominator in the price action, this randomness of bars is really going to mean something, you know. And I could say, you know, like, you know, I've been doing this for so long and so much, but let's just really look at the bars. What are the bars telling us? Like, who cares what any expert out there says? What do the bars mean? I need to see the patterns. I need to see why the ebb and the flow is the way that it is. So I became infatuated with identifying the common denominator, okay, and what that common denominator is, okay. So we're looking at market events, okay. When does the market say that it's done something, and when does it say it has failed to do something? Just like in programming, for all you programmers out there, okay. So the market fails to do something. It fails to make a higher high or a lower low, all right. That is a market event for me. When the market makes a new higher high or lower low, that is a market event. And what it came down to are these really basic ideas of consolidation and expansion. And you know what? The zone logic, the software that I've written, identifies market consolidation. Now, some people may call it high volume nodes, some people may call it accumulation and distribution. I don't care what you call it. It's the same thing, okay? And I keep track of these market events. I do all the heavy, or I have the software do all the heavy lifting for us so it saves us time, so we can focus our efforts on more analyzing the trend. Where is the shift happening in between supply and demand? Do I need to be paying attention? Which direction do I need to be paying attention to? That's what we're doing here. So that if we can identify where is low and where has low been in the past, what market event has put low into place, and what market event has put high into place, I now have context as to where's low, where's high, and where am I in the middle of things, okay? So that helps me not to be a buyer at the high areas, and it helps me not to sell into the lows of the day too, because I have an idea of what's going on. I have a grid of how things are supposed to be playing out. Does that make sense to everybody? I want to make sure that I'm making sense and that everybody can follow along with me. Yes, okay, good deal. I just wanted to make sure, because understanding context, I think, is one of the biggest things in this trading journey, you know, and it is, by understanding these events, just like understanding the trading events and the probabilities, it really makes a huge difference. And again, this is just a 100,000-foot overview of what we're looking at, but it's understanding how supply and demand work. Okay, how support and resistance works. Now, if you guys aren't familiar with those terms of supply and demand, support and resistance, I use them all in the same sentence. And the reason being is, guess what? I found out that they're actually brothers and sisters. Okay, so for the equation buffs out there, support and resistance plus time equals supply and demand. All right, so how do we add time to the equation? How long a zone has lasted on our charts? You know, how long has that supply area been on our charts? How long has that resistance level been on our chart? What time of day is price interacting with these levels? You know, and then higher time frame confluence. Those are all the different ways that we're looking at here. And just FYI, you'll see that right now we have a couple different zones, and if you look over here on the right-hand side of our chart, basically it turns your chart into somewhat of a rainbow color. Like there's all kinds of different colors going on here, and I guess you could say at the end of the rainbow is obviously a pot of gold, and on the right side of our chart is the pot of gold that we need to take advantage of. You know, so let's hurry up and do that, right? So when I look at this stuff, these colors are there for us to measure how many times those levels have lasted over time. Okay, so the levels in red represent resistance or supply, and the numbers in green over here represent demand or support. Okay, and the colors represent how many times, the colors of the zone represent how many times price has retested a level. Okay, so that's a little bit of what's going on there, just so everybody can follow along with us. Sorry that I was backtracking there a little bit, but we were talking about time, and I think time is very important because, let's face it, when we actually get a chart in front of us without anything on it, what do you see? Price moving over time. And I know that sounds really, really simple, but I think we need to check ourselves into what attributes do we really, really have, you know? And understanding the bars and understanding price action is something that in the APA community we really strive that everybody gets a hold of from the get-go. So as we are diving into the benefits of the APA community, bar reading is huge on that, you know, and you'll see that from the very beginning. So if we look at time, and this is another time tool that I've developed, it's called the APA time tool, and basically what we're looking at is a time analysis of the tops and the bottoms of the hour. Now, You may be asking yourself, so, well, that's really nice that you've basically turned my chart into a zebra. Congratulations. And it looks like it has a dog tag on it or something there. How is that going to help me? Well, that's a very legit point, you know. What does this help you with? Okay. Now, how many people here eat breakfast at the same time of day? Or roughly thereabout, right? You know, maybe within 15, 20 minutes every single day. You know, we are creatures of habits. We do things day in and day out at the same time. We go to work all at the same time, you know, like your boss is on your back, you know. All of these little structured things create something that I think in math psychology is absolutely amazing. And either subconsciously or consciously, we're doing this. And our market reflects that, okay? Now, I know that this still may seem very random, and you're like, wait, what are you talking about? Well, I'm talking about time patterns in our subconscious mind, basically, and how that plays out in the marketplace, okay? So what I'm looking for at these times of day, I'm looking for price to pivot, okay? So price to turn around and go in the opposite direction. Like here at the first 15 minutes, which is this green stripe here, there's a little 3-minute area circled around here. Then this is the top or the bottom of the hour, and like every other 30 minutes, or like the bottoms of the hour, are lightly gray versus the dark gray at the tops of the hour. Okay, and these are the time zones. Okay, now what I'm building in this is a case for context of time. All right, and you're going to see how this played out in our markets today, like just a couple hours ago. Like as you guys were probably listening to all these presentations, it worked. It worked like an hour ago. It was absolutely amazing, and we'll get into that in just a second. All right. So what we're doing here is we're looking for the major retracements or pullbacks, major reversal points to happen during these times of day. Okay, so that when we put the time zones in correlation with the price zones, we get something absolutely amazing. Okay, we're starting to see the underlying grid pattern that happens in our markets. Okay, and once you understand the fractal patterns that are being played out, it's the markets are not random. They're like this little baby monitor thing. It's the same patterns going on, completely different industries, different things that it's measuring, but it's the exact same deal, you know? So we just have to realize the pattern and how to take advantage of the common denominator. So that's really what we're looking for. Now, with the Apazone software, the Apazone software does a lot of the heavy lifting for you. Okay, so this is the APA methods package, and it's plotting out these little green diamonds here. And so as you can see, like when we're trending on this day, price action and time, they were all coming to one accord. The price zone, the time zone, and the price action were confirming these different areas. And it was literally plotting these diamonds on our chart in real time for us, okay? So nothing held back. The software does all the heavy lifting. It saves time, okay? And that's another great feature of the software and of the system is it saves you time. We have like a mentorship class. We have a lot of training classes throughout the weeks. All of those training materials are there to save you time so that you don't have to go through the years of study and looking at all this stuff, and that you can pick up the fractal. You can understand why the fractal is happening. I love this thing. It's called a Fibonacci. Okay, so Fibonacci patterns and ratios and stuff like this. It's really interesting how big the fib is. Um, and Fibonacci is cool because it is a fractal ratio, okay? And you know, people will swear up and down by it, and that's cool, man. I'm all about fractals. You know, I'm all about harmonic geometries and things of that nature. But once you understand the reciprocal and how that the common denominator behind the fractal, then you understand why the fib works. Okay, and so we attempt to show you why that's happening the way that it's happening, and at the same time identify these areas of consolidation and then rapid expansion. The market consolidates and then rapidly expands. And we keep track of all of those areas for you on the right side of your charts, okay? So we know what's going to be happening next. Does this all make sense so far? If I'm going too fast, please let me know. But I talk about this every single day, and I realize that when it comes like second nature to you, you can kind of get wrapped away with it a little bit, okay? So I'm going to get off the slides here, and we're going to go to some live charts, okay? All right, so let's go over here to some live charts, all right? Now, this is my little setup here, and I'm going to show you the fractal. I'm going to show you the Methods package and why it does so much really cool heavy lifting for you, okay? So first off, this will work for day trading, swing trading, Forex futures, currencies, stocks, ETFs. It doesn't work so well in mutual funds because they move like not at all. But anything that has some volatility to it is pretty much what we need, okay? So I'm going to show you what we had defined as the trend here today. Using the APA packages, we had the trend defined as up, all right? Now, if the trend is up and we're making new highs and all that kind of good stuff, then, you know, we're looking to buy pullbacks. We have a very simple analogy of what we're trying to do with all of this stuff in price action land, and that is we are trying to buy and sell pullbacks in the direction of trend. Okay, so our trend is up coming into the open today. All right, now throughout the day, our trend turned to a downtrend, but hey, that's okay. You know, time, price action. They told us that it was happening, so we just jump on board. Okay. So here on the mini Dow futures, given that the trend was up, here's what it was looking like. Okay, so real-time scenario, what's going on? So the market opens here at 8:30 Central Time, and the market comes down here, and nothing happens. We don't see any diamonds at all. You see a couple of zones here lined out for us, and then it gets down here to this area. Now, what I've done here is I've transposed a 15-minute zone that was here on our chart. If we show all the zones, you can see like the zones as they currently lie, and then you can see where this line was, or where this zone was over here. And if we say show dead zones, you can see like the little dead zone pops up there, and it's like, oh wow, well, look at that. Okay, so all we're looking for on these dead zones, and you know, we can do all this stuff from a little pull down here. And this is in the NinjaTrader platform, but you guys can do it just as well as I can. It's just the software is going to save you time. Right now we have NinjaTrader, TradeStation, Sierra Charts, and soon MetaTrader as well with support. But what the software is identifying is consolidation points. Okay, how do these areas of consolidation work over time? All right. So if we know where consolidation is, you see like that consolidation, you see how we're getting inside candles, the candles are smaller. If we can identify that area, and we can identify the consolidation up here on the top side, we now have context of here's our range, back and forth, okay? Now, we need to take this in context of our trend. So when we have an area and we're in an area of demand, you know, we're going to be buyers. I mean, how simple is that? You know, buy low and you sell high, all right? But the software does all the heavy lifting for you so that you can capture each one of those areas as it's playing out, all right? Now, as price shifts over time, we see new zones being created, and when the trend shifts here today, we can recognize that, and now we're ready to go the other way, all right? So this is all the stuff that the software does for you. I just drew it out just so that, you know, like the trend is up, the trend is down kind of thing, okay? So over here, coming into this period of time, and I just deleted one of my little zones here, so we can see the dead zones. Now, in price action theory and training, a lot of times you'll see how these levels will flip-flop back and forth, okay? And what do I mean by flip-flop back and forth? So we'll see an area of support become an area of resistance, okay? So I kind of feel like some of these zones are starting to flip-flop here, okay? So I personally wouldn't be surprised if we get a turnaround somewhere right in here if it does flip-flop in this zone, you know, and it's kind of reformed itself into this huge level, but you know what? That's a huge level, and that's okay, you know? What the software does is it takes what price is telling it. What is the market telling us that this level of supply should be? How big should resistance be? Okay, now in this case it happens to be really big, you know, and down there what looks like it could be the low of the day, you know, it's definitely not as big as that, but the market's telling us how big these levels should be. So as far as defining risk goes, it really helps, okay? Because we have an idea of, hey, if I'm still looking to be in an uptrend, or if I'm looking to do a counter trend, you know, I need to be able to say, all right, well, I could be taking support or demand all the way down here. Is that too much risk for me? Well, I'm going to let you guys be the judge of that, because frankly, I don't know your account sizes, nor do I really want to. You know, it's your job to be really good money managers, really good risk managers. But I'll just share with you what I did today. So out of that previous 15-minute zone that we had at the open, we got a couple little green diamonds here supplied by the APA methods, okay? And guess what? I took those little green diamonds to the long side because they were with trend. And lo and behold, the first one didn't work out, okay? We can see price touching the 15-minute zone. It came down here and kissed it on the mouth and then started to consolidate, okay? And what I like to do is I like to use the idea of, if I know where price is going to be consolidating at, I know that if it touches one of these levels and starts to go back in the same direction that it came in, it should happen in rapid expansion, okay? There should be some rapid expansion because I've identified consolidation, and in between two areas of consolidation, there should be expansion, okay? Well, the first one didn't work out for me, so that's just the way it goes. But my second attempt worked out nicely. Now notice that this happened at the top of the hour here for me, all right? So we pulled off a quick scalp and then pulled it up to the next zone of opposite type over here, okay? It really is that simple. And it actually, that one actually took, it was about a half-hour trade. So you can see the Y value representing how many ticks I made, okay? Hopefully that's clear to everybody, but let's zoom in here just a little bit. So you can see the Y value there, as well as you can see the time. So it took me like 1 minute to get my first target, okay? On this one, it took me about 30 minutes to get my target, okay? Now, I like to play these zones so that basically it's allowing me to take a target one tick outside of the level. Now, this one didn't work out very well, but guess what? I got T1 and I got my T2, all right? And then I got stopped out, and that's okay. You know, you pay to play, right? So I actually run with 3 targets, but that's just my personal style, and we can get into that a little bit later as far as what that looks like. And if you guys want to do the trial, you can see all the magic sauce. I actually do have a presentation that I'm running tomorrow morning as well, where we just go through the live markets and see the stuff work. Okay, so price ended up going through the 15-minute zone here. Okay, and you can kind of see this on the smaller time frames here. Now, remember how we're saying that the methods package does a lot of the heavy lifting for us. Okay, so if our trend is down, then we want to be paying attention to, if our new trend is down, we want to be paying attention to the red diamonds. And the green diamonds are counter trend. We don't want to do those. Okay, so we're only going to be looking for the diamonds to happen during our times of day. And you can see that, yes, there is good counter trend opportunity, but the red diamonds are with trend, and that's what happens at 11:30. And it was right after the nice little retracement there, and it is cratered down from there. Okay, and you can just now that the trend is down on our bigger time frame, we're saying the trend is down. You can see this is the epitrender. It is actually kind of flatlined right here, but it is colored our background red for the a negative trend. So that's what we're looking at. I want to keep things simple. I want to keep things very elementary at some point, just because we can. So you can see the price. We got a nice little signal there, and price just dropped like a rock from that point. Now this happened on YM. I was actually able to do something on CL to the same degree here. So let's go look at CL. Okay. On CL, I used the 15-minute as my context chart as a day trader. So we had the trend is up and rangy, and then over here on the 15-minute time frame, I did the same kind of thing. Okay. I took the long here at the top of the hour, and I only got a T1 off of that. Did not get my T2. And then inventories came out, and I got out just a little bit before inventories, and then it decided to go into the downtrend. Okay, so we went from the trend is up and rangy to the trend is down. Okay, so once it decided to do the downtrend at 10 o'clock here, you can see all these red diamonds saying go short, go short, go short. But here's the catch on this. Okay, now inside here, you see all these little red diamonds. I did not have enough risk to reward to be taking these before I was retesting this low right here. Okay, and because I did not have enough risk to reward to make it worthwhile, I passed on those red diamonds. And risk to reward, I think, is very important that we can measure that out in a systematic way. So I just put my little stop above the where the little diamond popped up here, and it happened to be a lower high than where this diamond popped up, so I was able to get into the trend move to the downside, and it's just really taken off. Now you'll notice that the first target was down there retesting the low, because what if it didn't break that low? Okay, I've now defined the trend from up and rangy to down, but what if it didn't break? What if my analysis is wrong? And that's okay. But I'm taking the best opportunity that gives me a decent risk reward. It may only have been a 1-to-1 in this case, but it allowed me to get into a downtrend, a newly formed downtrend move. And that downtrend has actually continued on since that point. Now you'll also notice that my second target is one tick outside of this box here. So what is that box there? Well, that box there just happens to be this right there. And if we actually turn on not the active zones, but the dead zones, you can see more of the fractal coming into play. Now, a lot of these zones that are now dead, you'll notice that price bounces on these zones to some degree every single time. Boom, boom, boom. It may have already gotten a bounce off of it, so on this particular zone we already had a good bounce off of it and launched it up, in a fractal way and pushed up with the trend yesterday, and now we've come to retest it, and it completely broke and sliced through the level, and it looks like we're going to continue to go down here. All right, but we want to define everything with trend. You know, they say let the trend be your friend, or the trend is your friend. I don't, whatever. But it is true when you understand how the fractal harmonics play with one another. Okay, so you'll see a lot of times that these levels recreate themselves, like this zone flip-flops, and it reforms itself a little bit. Okay, so we got just a small little bounce off of it, but then the zone reforms itself in a little bit different of a location, and that's okay, but you can really kind of tell that a flip-flop is happening there, and why the flip-flop happens there. The why behind the market, I think, really baffles a lot of traders, and let's not let that baffle. Like, we need context, and when supply and demand, support and resistance makes sense, let's use it. Let's use fractal geometry, because not only is this playing off in the 15-minute time frame, but it also plays off on like a 1-minute time frame. Okay, so we can see, why did price decide to turn around right there? Well, we had a level that was created as price came down here. We identified the area of consolidation. Price comes right back up to the area of consolidation and blows right through it. Take the diamonds with the trend. That's all it has to do with, you know, and that's pretty much as simple as I think it can get, you know. So in the Apazones community, we actually provide a whole bunch of training, and it's really, really awesome to see this stuff work. You know, we saw some theory before, now we're seeing practical application of it working out here, and it really is cool to see it work. So if you guys want to see it work, please feel free to check it out. This is the Apazones MarketFest special here. Okay, and we do have 3 packages available for everybody. So basically what it looks like is we have a basic bare bones type of package. Okay, and I'm sending everybody the link right now. All right, so we have an elements package, which is like a bare bones generations, and then the methods package, which does like all the heavy lifting for you. Now, we're actually opening this thing up for a trial here for everybody today. So if you guys want to do a trial, there's only a day left here on the trial, and we're doing 30% off the trial right now. So the elements package is $99 for the trial today. Generations, which does like multiple time frames. We actually didn't talk about multiple time frames, but I'll get into that multiple time frame analysis here. And then the methods package as well. So again, if you have an idea of context, then it just saves you so much time in your analysis of what is the market going to do, where's the market going to turn, why is the market turning the way that it's turning. It's that hidden order flow. Yes, the market tells us how it's going to do it, but we have to understand why these areas of consolidation are so important, okay? And the software does that for us automatically, which, hey, guess what? It saves you time. And that's really, really important, because you have so many things that you can be looking at when you're trading, and we want to simplify the approach to take back that time that you may have already spent in trading, or if you're brand new to trading, to save you a lot of time and give you the good stuff, let you know how to read the bars, let you know what's moving and driving the markets, and it's nothing new. That's the funny thing about it. It's just understanding how it all works together. So once you do the trial, you'll actually get access to our membership area. And this is our trial membership area. So you'll see all of our live events here that we post on there. You get access to different downloads and all kinds of stuff here on our page here, as well as our video library. And we consider like this the starter package type of video library. In the normal membership, the video library is much more extensive, but we want to take you through the basics of zone theory. We want to go through price action and let you listen to 30-year vets using the system, why they like what they do, all that kind of stuff. So we're here to really form a community and be a good support network for you as you do this trading endeavor. So if you just like the software and you just want time-saving tool that helps you to identify support and resistance, supply and demand, and a lot of people draw support and resistance as a line on a chart, and that has always perplexed me. And that's part of the reason why I came up with this tool, because the market hardly ever responds to a given line. Like a line on a chart is nice, but it doesn't mean that it's going to respect it to the T. And how far is it going to respect it to? And that's really why these areas are important, and the colors. Okay, so if we look at the colors of the zones, I'm going to come over here. You can see that all these aqua zones, these are all brand new and fresh zones. And then once price retests it one time, it turns to a blue zone, and then orange and purple. And the reason why we have these zone colors the way that we do is because, well, actually some people are colorblind, which is unfortunate, but hey, it happens. So we made this value change as well as a color change, just in case you are colorblind. We want to make sure that we're helping you out there as well. Okay, so every time a price gets retested, every time one of these market events gets created, you can easily identify that area over the long term. Now, how long do these zones last? Well, that's a really good question. Okay, these levels can last for years. Okay, now you may or may not believe me on this, but it is true, and I'm going to share with you one of the cool things that we do in the community is called the APA Swing Pub. So every week, tomorrow actually we're going to be doing this. Tomorrow afternoon we're going to be doing this, and if you guys sign up for the trial, you'll get the link to attend that special session. And on that special session, we will show you that these levels not only last in the short term, like maybe for the past day or a few weeks, but they can last for years. Okay, so this is the weekly silver. Okay, I've actually loaded up quite heavily on silver because this level down here, you see this little yellow level down here? If I double click on this, this actually goes and was formed back in April of 2009, all right? And here in September of 2015, we received a bounce off of it. Not only that, we formed a trend line off of it. Now, how many of you knew that this was a really good demand level to be looking at on silver? I'm guessing not too many, okay? But I think that's absolutely amazing to see a level playing out like that, okay? So here on a daily perspective, we see the same level. We see fractal confluence. What happens on one time frame is also happening on another time frame. So from the weekly, we go down to the daily, and we see this level here again, okay? And knowing that this was happening on silver, I took the appropriate actions of loading up on it, of buying silver at this time, okay? Because I knew what was happening, you know? So I load up on silver, and we've seen it explode up, you know? Now, this is only a couple dollars, but it's a really good place to buy, you know, when it's down here. Okay, so we've been watching this for several months, and if you check us out on YouTube, you can see all these videos of, hey, if we know where supply and demand is, and we know where support and resistance is, we can see how the support and resistance levels affect price movement as it moves in between supply and demand. Okay, so it's just really, really cool. So we can take a fractal that we can see on the weekly level, it comes down to a daily level, and then even into like a 60-minute level, which for swing trading we can use for entering on. All right, so this is 3 time frames all at once, but with the AppZone software I can actually put all of those into one chart. Okay, so with the zone software, we have a couple different packages here. So let me see here just a second. All right, so we're going to put on the APA methods MTF since I don't have just the APA zones multiple time frame. All right, so with the APA zones MTF, we can, the methods MTF, I can grab a 60-minute time frame and the zones on the 60-minute and superimpose them on my 15-minute chart. Okay, and if I wanted to, I could do this as well. I could grab 2 different time frames. So let's say that I'm also interested in looking at a, let's say a 30-minute, okay? So we can apply those on there all at the same time, and then at the top of the chart, depending on the platform, you will see all of the different time frames come to play, okay? Now, as we look at this, you can see that the zones from the 60-minute and the 30-minute are not all colored in, okay? So what we're doing here is, if you look over here on the right-hand side, because what I notice is when you draw these things out, a lot of times what happens is just because of the color overlays of blue on top of yellow, on top of brown, on top of aqua, it turns it into a mud color. So instead of turning it into a mud color for multiple time frames, we just took the top and the bottom line, highlighted them with a bounce count of that zone, and then displayed it for us. Okay, so you can see that this one's blue, and we have an idea of here's the top, here's the bottom. Okay, so you do have to match up the 2 levels together, but it gives us an idea. Okay, and when these zones actually form on our charts, you can actually tell that too by when those lines actually start plotting. Okay, so you can also see that we have some levels below us, but let's just say you only wanted to see just the current levels, like 1 level above us, 1 level below us. We can do that. Okay, so now you see the 60M above and the 30M above and the 30M below. Okay, so that is doable. All right, and we can also turn it off because we are huge believers in understanding the bars, and we don't really want to let anything distract us from just reading the bars. Yes, the software does a lot of the heavy lifting, but I'm more of a purist, so I enjoy just reading the candlestick, so I made everything easily like turn it off, kind of thing. So you can also put on the active zones, which have the filled in colors, but the multiple time frame does not. Okay, so we can actually show the 60-minute zones and the 30-minute zones and the current time frame zones all in one chart. Now that turns it into a little bit of mud, so let's just show only the current levels so you can see the most current levels. And right now we're going into somewhat of a consolidation period. Okay, you can kind of see how the zones are starting to overlap there. So I could get into a little bit more about that, but I won't here because kind of limited here on time. So just want to make sure that I convey the most interesting points here. All right, so It looks like I do have a couple of questions here that I do want to ask, but this is how the multiple time frame can all be applied to one time frame. There are people out there that actually apply like 5 different time frames all into one chart, and hey, that's cool, man. Like I have no problems with that at all. If that helps you simplify things, and that's totally awesome. Okay, so uh, does the trial come with the use of the software? Yes, it does. The software and the education come together. Okay, you will get access to a few different benefits here. So you get the software, like if you sign up for, depending on what package you sign up for, you'll get that software package. And then you can see here at the bottom what we have going on. So you'll get that software package and all those tools employed. You'll also get like workspaces and templates based upon what platform you have, if you have any of our supported platforms. And then over here in the trial stuff, you get access to all of this library plus our live events that we do throughout the week. Okay, so you get access to all of that. And I just think that's really cool. Plus, you can join us on our Skype channel as well, our community room. So that is all included. There are workspaces and templates in the different platforms that help you get up and going. And I think that's pretty cool. Okay, another question is there a way to automatically scan a sector for stocks that are displaying the prices entered into a zone? Yes, there is. And we're actually working on a way to advance that a little bit more as well right now. So that's going to be coming out. You can do it right now in NinjaTrader, but you can't in the other platforms. So we're going to be working on a way to actually advance that in NinjaTrader a little bit more. So the other thing that if you guys are TD or with TD Ameritrade and have accounts over there, you guys can actually use the NinjaTrader version as well. Okay, so that applies to you. It is NinjaTrader is free, and then all you'd be paying for is the access to the community room and to into the software. So everything could be free for you if you're on TD Ameritrade. Can you use the Asian session as the beginning? Yes, you can, if you would like to, for the start time. Now, I'm just going to make a quick comment about this on the APA time. You can set the APA time to do whatever you'd like. The start time and the end time is what you'd be setting here, so it's just whatever local time you want to run it to and from. So that is the APA time tool. Now, the APA methods package has the zones and the time zones and price action patterns all put into one tool, is basically how that works. Okay, so we can filter the zones all just with the time zones. Okay, like by just hitting time filter, support and resistance, and you hit that to true. I do recommend methods and using the time zones with methods only on your smallest time frames, usually underneath like a 10-minute chart. Okay, you can use methods for swing trading as well, but then you don't really need to turn the time zones on. Okay, I hope that makes sense, because the time zones for swing trading aren't as important because we're just looking for the little diamond to pop up there with price action and trend to confirm. Okay. The TD platform, so if you have a TD account, That's what it works with. Yes, you can use NinjaTrader with TD Ameritrade. So, yeah, you can use it on equities and stocks as well. So, I don't know, like we can go over to Apple and see what that looks like, and use it on Apple if you wanted to. Now, with Apple, you probably want to define the trend first, and you go through the tutorials and through the training, and we show you how to define trend. And there's like the AppAtrender tool, and you get an understanding of how the price action leads us to define trend. And we're keeping it real simple. We like to use fractal confluence, okay? So if we're over here on Apple, we're going to look for the zone to be on like a 15-minute chart and the entry chart at the same time, all right? So that's what we're looking for, and that's how I would want to play it, all right? So I hope that makes sense, but that's kind of how that works. We're looking for a fractal confluence of levels to all work out for us. All right, so I hope that makes sense for everybody. Not Apple, but lower priced stocks that trade at least 1.5 mil a day. Yes, we can use it on that. If you have any stocks that you want to look at, I believe I have access to all the stocks here. So that is what PayC looks like. Looks like we're in a nice little uptrend. So we want to buy low, sell high. Now it's been consolidating up here in this area, so you can kind of see like it did give us a little diamond down there at the very top of that retest, so that could have worked out. I have quite a few here. Do you guys want to look at the dailies, probably? Would that be helpful, or 15-minute okay? I'm not really into stocks myself, but okay. So that's what the 15-minute looks like. Now, another really cool feature about this is notice how these like two levels like stack on top of themselves. Now you could take them like that, but I think this should have actually been a retest of that level, okay? And with the zones, you can actually like move these zones around. They are objects that you can adjust here. Okay, so you can see how you can actually bump them all the way up next to their brother or sister. Now, this is only for the resistance zones. If you can overlap all the way overlap the supply zones if you wanted to with the demand zones. So you could do that, but if you see these two levels and you're like, man, those two should like be the same. Well, we can do that too. All right. So we can actually merge those two together here, and I will show you a little bit of how to do this. I don't really recommend it with the methods package applied on top, okay? Because I have two different levels of zones, so they all have the same name. But we can merge with previous, like you can right-click on these things, and you can see how it highlights that. You can actually merge them together, and maybe say that you want the zone to be like that. I don't know. And you can move them around if you so choose, which I think is really, really awesome, So it's kind of customizable to how you see the consolidation if you don't agree with the system. However, for the newer traders out there, I really don't recommend you adjust this very much. It's only once in a blue moon that I actually merge a zone together. Okay, it just doesn't happen very much, just because they're really good. Like the algos behind this thing for identifying that area of consolidation is really good, you know. So it usually doesn't need much changing around. So let's go over to another one. Here's this one. So, and again, it looks like our trend is up. We're kind of consolidating here, but we have room to the upside, so that's kind of interesting. Here's WTW. I always love this. Like, this just absolutely amazes me. How price will come down there, reload into demand, and then like take off again. You know, it's just it's super awesome. And I think the cool thing for me about that is this shows how this is working over the long haul, and it shows you like the fractals that we can form. So if you guys are into fractal harmonics, yes, it absolutely works. You know, fibs absolutely work. You know, because they're a fractal. That's all they are. They're just like anything else. You know, you can use any fractal pattern that you want, and it will give you the same results. But I really like looking at this based upon consolidation and then expansion, just because I feel like that's much more of a market event that I can trace over the long time. You know, just like we're looking back at 2009 on silver, like that's something that's really amazing. Gold as well. You know, gold is in one of those levels. Probably don't want to put 7 years of data on my 15-minute chart, but gold did the exact same thing. We've been looking at gold for a while, doing the same type of deal, and apparently I don't have enough data there. So sorry about that, guys. Well, it's not really giving me a whole lot. So, but that's roughly what we're looking at on gold. We can do it on foreign exchange markets. So it's really cool. But there's a couple different patterns when you see price touching these zones that I really want to emphasize for you, that I think is really, really cool. And I call this the price action failure pattern. So I'm actually going to even get rid of the methods package, just because once you see this common denominator, you'll probably never forget it again, okay? And it's super duper simple. So let's say that you have a new high up there. Now, when would we say prices failed to do something, all right? If we have a new high up here, when has price failed to do something? Okay, well, prices failed in my book to do something when I see another green bar that doesn't exceed that red bar, okay? So that's all well and good, but just because that happens doesn't give it validity enough for me. So I'm going to look at the lowest point, all right, which is right down here from this high to this next green bar. That's the lowest point on the charts at that point, all right? So when price closes below that blue line, that is like the line in the sand, when price closes below that line, it gives us an indication that, hey, price has failed to do something here, all right? So now this is actually a very interesting level for me to be doing stuff on, all right? Now, I don't know if you recall this from earlier, but this was actually my YM type of trade that didn't work out. I did this type of exact pattern to go along the first time, except it didn't work out. It barely took me out and then went in the direction. So, and that's trading. It happens, you know. That's why I look at the winning percentages and the probabilities so heavily is I know exactly what my strategy does, and that suffices for me, and stop out's not going to bother me at all because I'm playing probabilities. I'm not playing even price action so much as I know what's going to happen and I know how to do it. So that's kind of the stuff that we're doing in the Apazones community, is we're just conveying all that information so that if you're brand new to trading, hopefully you can learn all this stuff in just a couple quick months. We've seen somebody learn the course in about 3 months is the fastest that I've seen somebody pick up everything and actually be profitable with it. So, and again, this is all just a variation of understanding that consolidation pattern. Okay, so here would be another one. You know, we have a low here. We have a red candle. Oh, but we have another red candle. Okay, so the line in the sand would be right here. Okay, and as soon as price closes above that, then you tip to the upside. So now the funny thing is, not only does this work on the markets, but you remember that old little EKG or whatever have you? It actually works on that too. All right, the same type of pattern works all over the place. So it's really interesting how that works out for us. But so you have a new high, let's say, and then you'd have like a little retest down here. You draw the line in the sand as soon as you get a close below that point, and it works out, you know. So it works all over like that. But I think that's pretty cool. Does it show on which fib levels it would probably retrace? Yes, it will severely cut down the fib levels that you want to watch when you put the zones and your own fib tools on there. So just to give you an idea of what that looks like, because I know a lot of people are fib traders, right? A lot of people like fibs. I don't know why, but they do, so that's okay, right? So anyway, we actually have under the drop down, you can hit show fibs and it will draw the most recent fib that's on your NinjaTrader. And this is something that's only for NinjaTrader. So if you're TD Ameritrade or if you're with NinjaTrader or one of their supporting brokers, then this can happen for you too. You can take your fib and you can draw it to however you like and however you want to set up your fib. So that way it is only classifying a few number of, it's going to limit the number of fibs that you really want to look at depending on how you draw your fib. Okay, so I think that's pretty cool. So if you look at the most recent swing point, then like I only see like the 61.8 in there as being a important level. So just kind of cool how that works. Are there any more questions here? And then you can obviously come over here and unclick that and the fib will go away then too. I know you guys had a ton of questions, so I'm going to do my best to answer all of them, even though I don't think I got to see them all as they're coming in here. Um, yeah, so the the idea is that we're going to be providing context over multiple time frames, just because we can look at 15, a 60 minutes, all those different time frames in one, and take it from there, you know. So as we're looking at that fractal confluence, we can say, hey, you know what? This point has really good context of being like the low of the day or something like that, or we know that we're going to be in demand. Over here on YM, I believe it is. Yeah, there you go. There it is. So had a really good idea that, hey, we're coming down into demand. Now, could price go through this level? Yes, but I know that there's going to be a little bit of reactions considering at this time this was a brand new fresh zone, which means it was this aqua color, okay? And because it was this aqua color, I knew that there would be a reaction to some degree, okay? However, this is going against the trend of the day. Now, it just happened to be the low of the day so far, and we can see what that looks like. So that will probably be the low of the day. It's what I'm guessing right now. But that's a little bit of how that works, you know, so that we can understand why price like bounced down there on the Dow, you know. If we look at the E-mini S&P, which I'm sure probably many of you guys like to watch the E-mini S&P 500, you know, we can see the confluence going on here. You know, the ES did a very similar thing that the YM did. It came down here and just barely kissed that zone on the T. So in my mind, that's telling me that, you know, the institutions know how this level is drawn, the area of consolidation that it's drawn on, and they're extending out these things just like I am. I mean, when you see like price bouncing off of that level a few different times like that, I just think that's absolutely amazing. But these zones are dynamic, and sometimes they're really big, you know, like that's a really big zone on this chart. Sorry, that's just what price is telling me, that this area of resistance, or in this case, I would be thinking more like supply type of ideas, since I'm like more of a scalper day trader, you know, this area of supply or resistance is this big. That's how much risk I could be using to get into a continued short from here, you know. So I think that's really important, you know. And you know, like it's all nice and well and good to use a line on the chart, like, hey, here's a high up here. Price is failing to break that high, but how do you know price has failed to break that high? Where's the, if you don't have a zone up there, you just see these 2 points, you know? Like, how do you know that that's touching that area overall? You don't. That's why this is hidden, you know, and sometimes these levels last, you know, for years. It's absolutely amazing to see that fractal play out so well. So thank you guys for all the wonderful questions and spending some time with me today. Really appreciate it. And if you guys have any more questions or would like to email me directly, you can contact me through one of those means.